Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. Today, one thing we're going to talk about is some beaten down stocks that may now be on the road to recovery.
And we're going to take a look at the home builders because this may give us a good indication. Some of these are in a price consolidation, so let's see if they potentially are setting up. And first, let's take a look at the market. The market rallied for the fourth straight week. Stocks were buoyed by a rise in oil, which settled above $38 for the week. The European Central Bank cut their interest rates to zero, but President Mario Draghi doesn't see future rate cuts. Now, all eyes will be on Janet Yellen as the Fed meets next week to decide on whether to raise interest rates. The market is baking in that the Fed will not raise rates this month.
That seems to be a pretty certain deal. Very unlikely that they're going to raise rates. But the S&P has continued to head higher since finding a bottom in February, and it closed above the 2,000 mark this week and got back above the 200-day line. The NASDAQ has also been doing well, although it's still well below its 200-day line. But note how when it pulled back during this week, it did find support at the 50-day line. That's good to see.
And there were some very successful earnings reports this week. We had Dollar General, what was on a big beat. It rose 12% for the week. Candy, snacks, perishables, tobacco, and food sales jumped the most. Then we had shares of Ulta Beauty also jumped 17% after turning in solid numbers. They gave a robust 2016 forecast, and they continue to do well with their loyalty program.
Now, while there are a number of positive signs, top growth stocks like those in the IBD 50 haven't exactly been shooting out of the gate. Stamps.com, as you can see here, broke out on a nice gap up at the end of February, and it has found support at the buy point, and that's good, but you want to see it gain more traction. We have a number of other IBD 50 stocks that are either setting up or they're still within a buy zone, so you want to look for those to really start moving in heavier volume to show conviction.
And maybe the market will get a shot on the arm as we kick into earnings season, really kick into high gear next month. Now, this next week is kind of light on some names that are on the earnings list. Now, Netflix reports April 13th, Amazon is April 21st, McDonald's is April 22nd, and Alphabet April 23rd, and then we have Apple April 25th.
Right. So in the meantime, keep checking screens like the IBD 50, the Big Cap 20, and others to keep building your watch list and looking for stocks that are potentially setting up to move. And if you're not sure how to review a base, download the base checklist from our site for free at investors.com/investingshow. So given the chaotic nature of the market in recent months, and now that this most recent uptrend is trying to take hold, we've seen a number of beaten up stocks now trying to bounce back. Now, they're not necessarily near a buy point, but as a way to start building a watch list, we wanted to take a look at a few of them.
Now, when you're looking at some former leaders that are beginning to trend higher, what should you look for? Well, one key element is smooth and tight trading. That signals that a stock has truly found a bottom, at least a short-term bottom. So let's take a look at Netflix.
After trying to break out in December, Netflix went on a downward slope until finding a bottom in mid-February. It then rose 4 weeks in healthy trading and recaptured its 10-week line, which it tested again this week.
And if you look to the left, Netflix found support right around the low of its previous base. Now, so far, the recovery looks fairly contained and tight. Earnings are due April the 13th, and we'll find out how successful Netflix has been in its expansion to 160 international countries.
It's been a big expansion.
Big,
very
huge,
rapid
very
one,
fast.
Too. Right. Now, as we've noted on the show several times recently with different stocks, it's a sign of lingering technical weakness to have that 10-week line under the 40-week moving average. So as Netflix hopefully continues to bounce back, look for the 10-week line to get back above that longer-term cousin.
And look for the weekly volume to increase, showing more professional buying. Now, right now, Netflix has a C+ accumulation distribution rating. Yearly earnings expectations for next year, look at this, Matt, for 2017, huge. They anticipate a 315% increase. And fund ownership has also increased from 1,403 to 1,464 in the most recent quarter.
Right. Now, Protolabs is another example of a stock that took a drubbing but is now trying to bounce back. It offers industrial 3D printing as a service to quickly output prototypes and in smaller quantities actual usable parts. Now, it found a bottom last month, then posted 5 straight up weeks. I did an IBD stock analysis article and video on Protolabs this week, which you can find on our site. And as you can see, it's forming a first stage cup with an 80.05 entry.
Now, Michael Kors is another name that found a bottom around the $40 level from May of last year till February. And then the stock zoomed up 30% the week of February the 5th. Wow. And this was because of better than anticipated earnings numbers. Now, it's not only held on to those gains, but it has moved nicely higher since then. Again, pointing out the importance of strong earnings numbers and how closely the pros watch those numbers.
Now, Palo Alto Networks is another example. It's a leading player in the cybersecurity industry. And of course, given the rise of the Internet of Things, which connects essentially everything, and all the rise in cyber attacks, that is certainly an industry that will continue to grow. The stock peaked in July and has struggled since then. But like Netflix, it seems to be getting its mojo back, and it made a nice pop after reporting earnings in late February.
The stock had its IPO debut in July of 2012, and it didn't work right away. Now, sometimes these newer IPOs take a little while to get going. But since, once Palo Alto really started to move, I remember this, Matt. You remember that? We were covering it all the time. November 2013, it really started to zoom, and notice how it found support at the 40-week line all the way up until it really started rolling over in earnest at the beginning of this year.
But of course, now it may be getting ready to start rolling again. So while these and other stocks may not be near a buy point right now, they are showing signs of a possible rebound, so you want to keep an eye on them.
Yeah, and what does this show? Well, it shows that the pros have gone in. They have scooped up shares at a cheaper price, and that is positive. So let's see how these stocks continue to do.
Would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
Now, following up on the idea of tracking beaten down stocks that may, and we emphasize may be bouncing back, let's take a look at home builder stocks. Now, there are, of course, all kinds of predictions about the outlook for the housing market, mortgage rates, new versus existing home sales, and all of that. But what we want to focus on today is the chart action.
Now, NVR is currently in a price consolidation and has found support at the 40-week line. Now, it's trading above the 10-week line. That's also positive. But this is a later stage base. You can see that it's already built several areas of price consolidations as it has moved higher since January of 2014.
As you can see, it's not a smooth base per se, but the stock does sport a solid accumulation distribution rating of A-, and these heavy volume up weeks within the base show demand for NVR stock. So see if that continues, and you can also check out this week's IBD stock analysis on NVR on our site.
Now, another home builder that's currently forming a price consolidation is D.R. Horton. Now, some of these charts are fairly ugly, right, Matt? Look at the
Absolutely.
sell-off on that sharp. It's really sharp on the left side. D.R. Horton fell 31%, and that's a decent little haircut off the top. Now, they're going to report earnings April the 20th, and it's going to be important to watch those numbers to see how the group as a whole reports.
And if you think D.R. Horton had a haircut, take a look at LGI Homes. It definitely took a 2x4 to the head at the end of last year and sank.
No pun intended, huh, Matt?
No. But it is now, of course, trying to recover. And it got a nice boost on Wednesday after reporting Q4 earnings. But note how it hit resistance at the 40-week line and, as we've been saying a lot, how the 10-week is below the 40-week moving average. So LGI Homes and other home builders are not out of the woods just yet.
No, definitely not. Now, these are the top 40 industry groups, which we have listed in the paper every day. Now, the home builders didn't even make this cut. In fact, they're at the bottom half of our industry group ratings. Now, normally, we find our growth names closer to the top of the list. But this list does change on a regular basis, daily, and sometimes lower-rated industry groups do move up. That's what gives us rotation in the market. In fact, this is something that all investors should keep an eye on, which are the top industry groups.
Another way to track and potentially invest in the home builders is with the Spider S&P Home Builders ETF. The ticker for that is XHB. You can see its weekly chart looks a lot like the other home builder stocks, the individual stocks that we just looked at. Some investors may use this ETF as a way to benefit from the overall industry's move if the home builders do start to take off.
Now, ETFs are a great way to see movement from different industry groups, but they typically are not going to give you the same gains as individual stocks will. Now, but they certainly can have their place. I know that Jerry Sammet, who's one of our favorite meetup leaders, he's been on the radio show with us before. He helps out at several meetup groups in the Los Angeles area. And Jerry will use an ETF if he cannot find an individual stock to buy as we start a new uptrend.
Certainly a decent strategy. Now, while the home builders may not be near a buy point right now, keep building your watch list by tracking industries and individual stocks that are showing signs of a potential recovery. Now, before we wrap up, since we were talking about potential industries and stocks that could be recovering, we want to let you know that you can track some of that by looking at the industry themes and the industry snapshot articles, and we'll link to those on our website.
And I just wanted to say it's been so nice meeting all of you out on the road. I've been out three or 4 weeks. I've been out a lot to different cities. So it's been wonderful meeting all of you, and we will see you next week.